Okay, let's go ahead and get started. I'll introduce our guest today for the webinar series, Joseph Lensing. He's with Iowa State University Extension and Outreach, and he's going to talk with us today about a farmland financial overview. Welcome, Joseph, and let's get started.
All right, thank you everybody for being here. As Jenna mentioned, I am with Iowa State University Extension and Outreach. I cover Northeast Iowa as a farm management specialist. So today we're going to do a little bit of financial overview on the farm. In and of itself, this conversation could take multiple days, so I decided to kind of categorize it into what today will be about 15 or so minutes of leasing, and then likewise, same amount of time for cost of production and some resources there, and then end with some financial statements. So again, I work for Iowa State Extension. I started in May of this year, so I'm relatively new to the position. I cover Northeast Iowa, which would be Butler County, and then I have a nice square area of Dubuque County over to Black Hawk and all the way north. My professional experience thus far has been in agronomy and finance, and my personal experience has been in beef production. I am an Upper Iowa graduated there in 2019 with a degree in ag business and marketing. I'm from Oelwein and currently live in Waukoma. I've made a few moves since I graduated college, and I'm where I'm at now with my fiance, and we're loving it. So first and foremost, when it comes to tools for any category of farm finance, there's a lot of resources out there. So I know last session Ann spoke a lot on Ag Decision Maker. Ag Decision Maker has a ton of resources available, and we'll discuss some of those here, but feel free to at any point in time, if you're looking for something along these lines, do some research on Ag Decision Maker. You can get lost real quick, but there's a lot of information on there available, as well as ISU Extension and Outreach Specialists. Finance wise, contact myself. I've got my contact information at the end. Contact myself or contact one of my colleagues. Call your local county extension office if it's not one of my counties, and they'll put you in contact with one of the individuals I work with. And at the end of the day, you know your operation best. So leasing, we'll start with, is a handshake good enough for a lease agreement? Very touchy subject for some people, but at the end of the day, I would say no. Okay. A lot of handshake agreements don't rely on selective memory. So the agreements that have a lot of information in them that are very specific, make sure we're putting those in writing, because if there's any disagreement later on, that could come to be an issue. Cover all provisions that are meant to be in the contract. So what that means is, if we have conservations become very important in a lot of these lease agreements. So if we have specific requests in part of the landowner, make sure we're putting those on paper and defining terms. So a lot of this goes hand in hand. It's not just we're renting X amount of acres at X dollar per acre. Okay, there can be a lot of fine details in those arrangements, and there commonly are. Make sure we're putting those in writing to make sure that they're followed out and there's no issues later on down the road. Unfortunately, sometimes with lease agreements and land that's rented in the state of Iowa, at some point, one party might become incapacitated. One party might have issues going on and might not be available. Okay, there's a lot of examples of that. A written document will clarify that agreement if that was to be the case. So, contrary to some people's beliefs, having it in writing doesn't necessarily mean we don't trust the other person. Okay, it can just protect one party. Valuing the relationship is a reason to put it in writing. It's not always a bad thing to put it in writing. We just don't want misunderstandings later on down the road. So it's not a I don't trust you type of situation. It can just be to protect both of us, to make sure everything's followed out smoothly as intended. We're just going to put it in writing. So Ag Decision Maker has a lot of resources on this. We have a 3 and 11 page lease form the 3-page being much simpler than the 11-page, but there's a lot of people that have contacted me saying they want a lot of details put in there and they prefer the longer one. So whichever one, if you so choose to do this, Ag Decision Maker has these templates. You can fill them out, print them out, have the county extension office do that if you don't want to. And that can be a great way to start for communicating, between the landowner and the tenant. So again, why should a farm lease be written? Provides assurance that each party understands. So sometimes it could just be one small minor detail in the eyes of one party might be forgotten, might be misunderstood. Having it in writing will clarify that at any point in time. Leases of more than 1 year must be in writing to be technically enforceable. So there's a little bit of a gray area there. If a verbal agreement is what both parties have agreed on, that contract is legally only in force for 1 year, and then it will automatically renew if it's not terminated. And we'll get to termination here in a second. Leases of 5 or more years, albeit not very common, must be in writing and recorded at the county recorder's office to be enforceable. And then leases of more than 20 years are technically not enforceable. So ways to improve farm lease agreements: legal description of the property and number of contract acres is accurate. This is commonly not an issue, but I've had people discuss with me, what should I call the farm name? We can say it's the parcel on the intersection of this road and this road. It gets a little hairy if the field is just called the 40 on the other side of the woods, because that might not be an exact location and that might arise some issues. Full names, mailing address, email addresses, the more information, the better, quite honestly. Making sure the payment terms are clear. Are we doing a cash rent situation? Are we doing a flex rent situation? And then we need to make sure we're putting the payable dates on there. If we're taking 2 payments in that year, we need to know the date of payment 1, date of payment 2. If we're doing 1 payment, the date of that particular payment. And then describe the allowed use if other than farming, if there's hunting rights included in that lease, if there's information in there on whether corn stalks can be billed or not. The more the merrier for lease agreements. As much information as you can put on it, you really can't overload it, because if there's a lot more things requested in one lease arrangement compared to the other, we need to have all those written down. And then both landlord and tenant need to sign it and then receive a copy. So as I mentioned, farm lease termination. Does that mean it's the end of a relationship between the landowner, and the tenant? Not necessarily, and in a lot of cases, it does not mean that that's the end of the relationship. Termination can just be, we're going to terminate our current contract and we're going to write a new one. And that could be the decision that either of the 2 parties can make. This year, commonly, with commodity prices being down, I had a lot of tenants call me saying, I want to rewrite the lease. I don't want to pay the price I paid this year on 1-year lease in 2025. What do I do? Well, we terminate the current lease, and then we communicate with the landowner if we can rewrite a new lease at a reduced price, again, given what these commodity prices have done over the last several months. Ag Decision Maker does have a notice of termination template here. Find that if you like, have the county print it off, contact me. We can get this to you. So the dates, I don't know if so termination, whether the lease itself is in writing or an oral arrangement, the termination notice must be in writing. And the best practice is to serve the written notice before September 1st. So we've passed that date now, but coming up to next year, this is always a big topic every year. Make sure those termination notices are handed over to the other party, whether it be landowner to tenant, tenant to landowner, before September 1st is always best practice. That will in and of itself terminate the current lease on March 1st. So midnight of March 1st will be when that termination is finally in effect. So obviously the tenant has the right, if they get served a termination notice on September 1st, they can still harvest the crop. But as of March 1st, the following year, that will be their last opportunity on that farm if a new lease is not written. Serving it in person is always the best way to do this, although it's not always the easiest or the most efficient. If so, though, have them sign the notice and keep a copy. It can also be served by certified US mail. Make sure we're keeping a copy of that receipt, or by publication if neither in person or mail can be accomplished. So this is a rare situation, but if somebody was to, for example, end up in jail, go on vacation and not seem to have told anybody when they were coming back, we can do this by publication. Although it would cost a little money, don't know how much depending on the area, but that's always an option as well if the first two are unattainable. A little bit more on leasing. Ag Decision Maker has a lot of files for calculating what is a fair cash rental rate. If this is a topic you'd like to learn more about, every year we do our farmland leasing meetings in around 70 of the counties in Iowa. We end up having a meeting. So don't be afraid to reach out, come next, I'd say June or July, to see if the county that you're in is having one. Typically run those late July and then through August to get to that before September 1st termination date. But if you just want to look on Ag Decision Maker, we do have the files. There's 6 common, if you will, methods of calculating a fair cash rental rate: share of gross income, yield potential based on the CSR2 rating of the land, percentage of land value and tenants residual, and then crop share equivalent. So a lot of math involved there. Some people have called me just saying, what's the average rental rate in this county? That's one way to do it. We could also look a little bit more at what's the quality of the land we're considering renting, and that could be used for our calculations. We also have a file for flexible farm lease agreements. Flexible leases can be complicated in some situations. I don't know if anybody on here has engaged in one of those, but they seem to be around 10% of the lease arrangements in the state seem to be flex lease, much lower than some other states, especially Illinois. But we do have resources on that. Again, feel free to contact somebody with an extension about flex leases if that's something you're interested in. And then A1-20 is the estimated cost of crop production, and we'll discuss that later. There's a lot of spreadsheets available for a multitude of different agricultural management practices. Annual reports. This is a topic I like to discuss because in a lot of lease arrangements, tenants and landowners don't always communicate on how the field's doing, what the yield ended up being, what was applied, what are our practices on that farm, on that field throughout the year. So a farmland annual lease report can be a great way to build that bridge of communication between the two parties. As you can see right here on the right, that is the form itself. Crop 1, crop 2, we have acres, seed varieties, we can put in the seeding rate, planting dates, and then our fertilizer and pesticide use. I have it seems to be growing, the number of landowners that don't just rent the field out and take the check. They want to know what's going on, how things are going. And with what we've seen in commodity prices over the last 6 to 8 months, a lot of these landowners are concerned about the profitability of their tenants. So if we don't have conversations on productivity, on efficiency, on not necessarily how we're marketing the crop, but what are the markets like in general? If we don't have that line of communication, it might be hard to come up with a rental rate for future years. And to mention, this contract, if filled out, should remain confidential. It's for business purposes. Do not be sharing this information to the outside public. So again, benefits of annual reporting, it increases communication on market and field performance between the two parties. It seems, as I mentioned, to be an ever growing concern for landowners that they want to know a little bit more about what their tenant's doing. Establishes a line of communication for calculating future rental rates. A lot of landowners want to be fair, and a lot of landowners want to know what is fair. If we don't discuss how a field's doing, what the markets are like, if one party isn't doing that information or has access to that information, if the other party's keeping it, tight to the vest, we really can't come up with accurate future rent prices compared to previous years if we don't know what trends, what direction we're moving in. And last but not least, it allows the landlord access to information. So what's, communication when I do my leasing meetings is a word that comes up a lot. So there are many landowner tenant relationships through Iowa. There's some landowners that have a handful or more rental arrangements with different farmers just with their own land. Some counties have close to 70% of their farmland under rental arrangement in the state. 58% of the state overall, according to the 2022 Land Ownership and Tenure Survey, is rented. So these are rental arrangements are very, very, very common throughout the state. And among those landowners, 53% of them do not farm, and 47% either have had some farming experience or are retired farmers. So when looking at the landowners who have not had much farming experience or any, they do want to be involved and they want to know a little bit because they're learning as well. I've had a lot of individuals contact me, and they can get a little upset if their tenant isn't giving them adequate information. So with that annual report, what I'd stress to you is if that's something you do want filled out, if you're on the landowner side of things, you can put that in your lease arrangement that an annual report form must be filled out every year. Landowners, again, I mentioned there's an increasing desire to understand how the land is being farmed and how successful things are, how good certain years are. And then producers need to be always willing to share information with their landowners about their costs, their methods of production, their practices, and the markets in general. So as we blend in the cost of production here, as I mentioned, cost of production has been a kind of a hot button issue. I would say this current past growing season, and then the growing season upcoming in 2025, just because of what corn and soybean prices have done and how that's related to the cost of those commodities. Costs associated with producing a crop, including livestock, is what our cost of production is. Within that, we have our fixed cost, which are costs that we in no way, shape, or form can avoid, our machinery costs, our depreciation, rent and labor, and then our variable costs, such as a lot of our inputs, seed, fertilizer, fuel, pesticide use, and feed. On the bottom left, little chart on what break-even price is. So our break-even price is our fixed cost divided by our production volume. So if we're doing this on a per acre basis, if our fixed costs are 400 and our yield is 200, take 400 divided by 200, get 2, and then we add our variable cost to that. Our break-even sales volume, which would be our break-even yield, we take our total fixed cost, then divide that by selling price, subtracting variable cost per bushel if we're doing corn or soybeans on that, and that'll get our break-even sales volume. So this is a chart I had in my lease agreements or lease meetings this year. So starting from the top with the gray line, this is a chart from 2014 to 2024. Gray line being soybeans following corn, the red line with the squares being corn following corn, and the yellow line being corn following soybeans. So as you can see, what 2024 numbers were projected based on Iowa State research. Soybeans, $11.24. corn on corn at $5.14, and corn after soybeans of $4.46. These prices are all higher than what a majority of farmers and what a majority of bushels were sold at this fall, or what it looks like they could be sold at if they've been held onto and to be sold this spring or next summer. So cost of production is an ever-growing challenge in agriculture currently at the time. Things move in cycles. We came off really good years in 21 and 22. 23 was not as good, but good in general. And then 24 came along, prices declined, and it looks like we're in a commodity market that seems to not want to move much either direction in the next 6 to 18 months. A lot of things could happen there, but as it pertains to cost of production from the farmer, the operator side, we need to know what our cost of production is. We need to know how profitable we can be, if we can be profitable, and ways to improve that if it's not looking so good. And on the landowner side, having an idea of cost of production is going to give us a lot more information if we are looking at adjusting our rental arrangement, what we're looking at for future years if this cycle continues. So again, A1-20, I have a link on it right there. Contains multiple editable files on cost and return tools, crop budgets, break-even worksheets, and calculators, plus more. It does include files for row crop and livestock. And I have some slides here of what A1-20 would be for our cost of production. I believe this is corn. This is corn after soybeans. So we look at filling this out. We just, field names. So if we have the Johnson farm expected yield, for this, and we put our 5-year, 10-year average production history there, acres. And then for our pre-harvest machinery, we have our disc, nitrogen application, cultivation, planting, spraying, custom hire, and then anything else that might be involved in that operation. Our fixed costs, our variable costs, and then our totals. So that would be for pre-harvest machinery. Here is our seed, chemical, and fertilizer. So we break this out into seed. It can be broken down into cost per 1,000 kernels, and then kernels per acre. Our nitrogen in pound and price per pound, and then pounds per acre. So these are all editable. So these are not concrete prices. We don't have to use these. If the price for nitrogen, like it was a few years ago, is closer to $1 a pound, we can just edit that to make it $1 a pound. Phosphate, potash, lime, herbicides, and then crop insurance, miscellaneous. This has probably every input that you could ever put on. So this is a very comprehensive file. And then we keep totaling it all the way down. This is 4 pages. It's the best I could do without making the numbers too small. Then we have our harvest machinery, combine, grain cart, hauling, drying, handling, and then our labor. So what that gets, and then we have land as well, I guess. So if we were paying $285 in rent, if I remember right, this is our very fixed costs and then our variable costs. So what this would do is calculate the entire 500 acres for what's currently in this file, and would give us a total fixed and variable costs of $4.46. So this is an example, really. This is just a rundown of the file itself. Again, A1-20. There's several more: corn following corn, corn following soybeans. There's a bunch for livestock. Make sure, if this is something you're interested in, to look on Ag Decision Maker and play around with it a little bit. Okay, so record keeping. Record keeping is always an issue and always a very important conversation, especially in the tax times that we're in. And farmers in general have always, I grew up on a farm. Farmers have always not been the party that wants to pay a lot of taxes. So to provide accurate record keeping, we need to make sure that everything is recorded. And if you're looking specifically at return on investment and profitability based on field, or with livestock based on a certain group of livestock you buy, You need to keep those expenses and sales recorded on a per field or per group basis, if at all possible. Sometimes livestock get intermingled. Sometimes a field might be cut in half, but you might just farm it as one field. Do your best, but if we're ultimately looking at calculating return on investment, we need to know what was the return on investment for this field, if that's what our main goal is. And with livestock, if we buy 3 groups of steers throughout the year that we're going to finish to market, we want to know how each of the 3 groups did. Records will help understanding return on investment and profitability per field or per acre, animal group, etc. And then this information is all going to be very handy come tax time, which we're right around the corner from. On the right, simple formula for calculating return on investment being net profit divided by the cost of that investment times 100%. So there's a multitude of financial statements out there. Some of the most important ones pertaining to the farming community are going to be obviously the balance sheet, which covers our assets and liabilities, our cash flow statement, our cash in, our cash out, our income statement, which shows revenues and expenses, but really hits on profitability, and then our statement of owner's equity. So that file highlighted in red there, C3-56, is going to be a link that has a couple Excel documents on it, one of which is called the comprehensive financial statements. That is all of the financial statements you could ever utilize, all in one format that's editable and can be filled. None of it's pre-filled. It can all be edited from that file. Great tool. So visit that. If you need even templates of how to fill these out, or if you're starting from scratch, these are great resources just to start on. So a little bit more about a balance sheet, or what's also sometimes referred to as a net worth statement. This is going to contain our assets and our liabilities. So ultimately, a balance sheet is going to be a tool that measures your net worth. It's used to evaluate the ownership of assets and is a common document that's used by lending institutions. So it is a tax document as well, but it is more so utilized and important for lending situations. If you were to go apply for a loan, if you're looking at some money, this would be a balance sheet, something that the banker would more than oftentimes request. Some examples here. The example on the left is a little more comprehensive. That is a image I got off of Google, and then the one on the right is going to be one that Iowa State has in one of their periodicals. So as we can see, the one on the left, assets and liabilities, current and long-term property, plant, and equipment. Very invigorating stuff unless you love accounting. And then on the right, more assets and liabilities, and then our net worth, and then with some ratios down there as well. Current ratio being our current assets divided by our current liabilities, and then our debt to asset ratio of our 150,000 divided by our 250,000. Cash flow statement. So a cash flow shows cash income and cash expenses over a period of time, whether that period of time is a month, a quarter, or a year. What cash flow measures is essentially measures cash on hand and liquidity of an operation. So here's an Iowa State cash flow budget. Not too hard to follow here. Beginning balance, sale. So we add that to that. We have another sale, and this is all by quarter. You move from left to right all the way down through here with the inflows and the expenditures, and then we get our quarterly net cash flow. And what we can do over time is accumulate all of these to get to our final tally here at the end of fourth quarter of this particular year at $10,000. An income statement. Income statement is going to list revenues and expenses. It's used to calculate net income and profitability. covers a period of time as well, month, quarter, annually, commonly annually. And then it's utilized for tax purposes. So this is going to be what you take in the spring, whether you're an individual or a farm operation or a business owner of any kind. An income statement is going to be where your profitability is shown, your net profitability, and that is what you are in turn going to be taxed on. A few more examples. Net farm income statement on Ag Decision Maker. And then on the right is going to be a picture I found off of Google that's kind of got some things labeled for farm. So revenues, it's broken down into livestock, crops, government payments, and custom work for a total of $199,700. And then our expenses, seed, chemical, fertilizer, labor, taxes, so on and so forth, of $150,500, which gets us $49,200. So an income statement, this is where your profitability is going to be shown. And as I have some slides here in a little bit, profitability and our cash flow statement don't always, and oftentimes rarely are this, will give you the same number. Statement of owner's equity. This will show equity changes over time by focusing on the assets and liabilities. So period of time, again, commonly 1 year. In this example, we start with our beginning net worth, we add income, we deduct expenses, and we end up with, in this particular year, a loss of $15,000. So this is another one of our major financial statements that we do have on Ag Decision Maker as well. And the relationship between all four of them. So in terms of an accounting year, we start with our beginning net worth statement. So let's say January 1st of the year with our assets and liabilities. And we take into account our statement of cash flows. So if that is a net positive, and then our net income statement is also a net positive, our statement of owner's equity, our change in net worth will all lead to, in that example, a increase in ending net worth for that accounting year. So all these documents they all are different, not necessarily dependent or independent of each other. Some of them use some of the same information, but what they do is they end up with a comprehensive, they all have this relationship for a comprehensive farm statement for a period of time that's carried out throughout the years. So again, as I mentioned, profitability and cash flow are not always, and oftentimes rarely, not the same. So profitability is something that's shown on an income statement and will show either a loss or a return. So it's simply income, subtracted your expenses. A cash flow, on the other hand, will show your statement of cash, to be shown on the statement of cash flows, will show the cash in and the cash out. So there are some, as you see on the bottom, interest and depreciation are not synonymous, and something I use. So interest and depreciation are not cash expenses, but they are expenses that can be shown on an income statement. Excuse me. So many items show up on both financial statements, but again, interest and depreciation do not show up on both, as interest and depreciation show up on our income statement, not our cash flow. So when operations talk about being profitable, that's not always synonymous with having a positive cash flow, and vice versa. A positive cash flow does not always lead to profitability. So that in and of itself creates the importance to filling out both an income statement and a cash flow to see what the overall financial picture of the operation is. And there's a lot more of this available on Ag Decision Maker. So if you go to Ag Decision Maker, you'll see one of the main topics on the bar there is whole farm. And then you'll go down to financial, and there's a lot of documents on here, a lot of education material. We have some that are purely just on definitions. So if you're looking at getting a little more educated on this matter, looking for formats on balance sheets, income statements, there are plenty of resources here on Ag Decision Maker. It truly is it's a wealth of knowledge in and of itself. So all in all, some key takeaways, keep records up to date and accessible. So if we have records that are up to date but can't be found, they're not really valuable. So keep them up to date and accessible for whenever you might need them. Consider accounting software. Not an expert on that myself, and I'm sure there's a lot that the farming community would recommend, but do some research if that's something you're interested in. Consider that software. It could save you a lot of time and headache. Communicate with all involved parties. I know the January edition of this seminar is on estate planning or along those lines. Much like with estate planning, if we're doing some financial information, financial statements, and filling those out on an operation, communicate with all parties that are involved. Okay, if it's a partnership, communicate with the other partner, the other partners. If it's a family operation, have all managers, anybody who has access to information on the finances, have them all involved to accomplish that goal. And then consult with legal and tax professionals. I myself am neither an accountant nor a lawyer. So what we can do within extension is get you, if making a complex financial decision is, let's say, a 10-step process, we can get you through the first 3 to 5 steps or so. And then we will eventually hand you off to your tax or legal professional, your accountant, or your lawyer, or your attorney. So that's the most important thing here is if you have any questions on things, feel free to reach out to anybody within extension. But at the end of the day, some issues might be more so aligned with your accountant or your attorney directly, but contact us first. We'd love to help you as far as we can. One thing I decided to add in here was beneficial ownership reporting. A lot of people have already done this, but with the Iowa Secretary of State, starting in January 1st of 2025, if you have not filed, that's when the fines are starting. So if you're any of these business entities, if any of them apply to you and you have heard about this, not filled it out, I would contact your legal advisor, your attorney, and see if you forgot to do it, if you didn't do it, if you did and you forgot that you did it. Just thought I'd add this in there to benefit those who may have forgotten or let slip through the cracks, because penalties will be starting on this in I believe on January 1st of this upcoming year, which is coming pretty close. And that is the end. So again, that's my contact information. That is my cell phone number. So that's the easiest, most direct way to get to me, as well as my email. Spread that around. Don't be afraid to reach out. As I see, we have a little over 15 minutes left. I guess if there's any questions, I can try to take a stab at something.
Yeah, we do have a question in the chat box from Christy. She talks about there was a supplemental contract created due to splitting the cost of a tile installation. We had it set up to depreciate the cost spent over a period of 10 years to ensure that if we lose the right to farm the land, we'll be compensated for the remaining cost of tile. Does something like this, because the number of years covered, need to be recorded at the county level?
Let me get to the chat box. Let me read that.
Yeah. And everybody, if you have any questions, drop them in the chat box and I'll read them off to Joseph.
Say I don't believe, and I can look into that for you there, Christy, but I don't believe because Ag Decision Maker, I forget the file number, but we do have and I don't know if that's where you got it, but we do have a land improvement tile contract for big purchases like that, big investments like that. And I am not familiar with that needing to be filed at the county level, but that is becoming a very common practice, especially since tile costs upwards of $1,000 an acre. It's getting very, I believe, yeah, I could pull that up. Maybe I'll wait on that.
Yeah, and I think she dropped that in when you were showing like the leases and the terms of lease and like when to record those and so.
Yep. I don't believe that specific contract, if that's a separate contract that's within the lease, I don't believe that has to be recorded at the county level, but I could double check on that.
Well, Joseph, I feel like you gave a really broad overview of a lot of different topics, and it was all really interesting. If you would be able to, I would love it if you could share your presentation with me so I can send that out to the group too. You had a lot of really good um, sheets that you suggested people use, and some of those costs, especially for like crop production. I took a screenshot of that. I thought that was really interesting, and how it really goes up and down, doesn't it? So since there's no more questions, I think that wraps up this session of the webinar series. Everybody have a great rest of your afternoon. Oh, we got one message. Oh, thank you. All right, well, thank you guys. Have a great rest of your day and afternoon. I will be sending out the link shortly.
All right. Thank you, guys.
Bye.